It's our Anything Goes Friday, although in the we'll get to that in the third hour of our program, just your calls on any topic. But right now, as we do periodically, we have Ravi Batra on. He is the professor of economics at Southern Methodist University and the author of New York Times bestselling, internationally bestselling author of a whole pile of books. His most recent, The New Golden Age, and before that, Greenspan's Fraud. And Dr. Batra, before we pick up the phone calls, just, my point of privilege here. How much time, what are your thoughts on, you talk about these commodity bubbles and how the price of oil is being manipulated by a cartel. To what extent do you think that might be happening with other commodities? Food right now, I'm seeing wheat is up like 500% over a year ago, and certainly we saw recently this very, very stark rise in the price of gold. It's dropped off somewhat now. What are your thoughts on these? Is this just money moving from one, out of the stock market and into gold, out of gold into oil, out of oil into wheat? Is it that kind of thing? Is this all speculation, or are we looking at fundamentals here?
Well, I will give you the explanation in a minute, but let me first cite that this is all part of a cycle of inflation, which I have discussed thoroughly in this book, The New Golden Age.
I recall.
The cycle tells me that inflation heats up every third decade. This is the property, this is a historical cycle in the United States. Inflation heats up every third decade. The last decade of high inflation were the 1970s. Mm-hmm. So I had made this forecast 5, 6, 7 years ago, in fact, that when this decade comes, we'll see a major jump in a variety of items that represent inflation. Mm-hmm. Now, there are 4 items that represent inflation. One is the CPI, the Consumer Price Index. The other is the price of food items. The third one is oil. And fourth is gold. Mm-hmm. These are the 4 items, and housing also, you can include that. These are the 4 or 5 items that can tell you whether or not a decade is inflationary. Mm-hmm. So I had predicted that all these items will be gaining in prices very strongly in this decade, and especially as we come to the end of the decade, then these prices will really go through the roof. And that's what's happening. So those forecasts are coming, and my forecast for all these things is that they'll keep going up till the very end of this decade, except for housing. The housing bubble cannot go on for more than 7 years, but these other bubbles can go on for the whole decade. And so now the housing bubble is bursting, which was also my forecast that from 2007 on it will start to burst. Now let's look at the economic explanation for all these rise in prices. Now, the economic explanation is again what I just talked about. Productivity is rising very fast, wages are not. So the result is, after debt has been created and goods have been sold, remember, debt creation is very important. Mm-hmm. After debt has been created and the companies have sold their goods, what will happen? Their profits will skyrocket because the entire fruit of growing productivity will go into profits.
Right. So in other words, as workers' productivity goes up and their wages don't, that profit ends up in the pockets of the owners and the stockholders of the corporations, basically.
But the profit has to be supported by debt. See, goods have to be sold. So
right. So the consumers have to borrow money to buy the stuff.
Exactly. Buy the stuff. So profits go up, but these are debt-supported profits.
Right.
Okay, profits go up sharply. Now because consumer demand doesn't rise much, there are not many opportunities for business investment. Because business investment, if you expand your business investment, then you are expanding production, which has to be bought by consumers, and that's not rising much. So what happens? These profits end up in the hands of CEOs and, of course, big corporations. They don't have business opportunities anymore, so they speculate with it. They use that money to buy stocks, they use that money to buy oil or to buy commodities. They speculate a lot, so speculation goes up. But what's the cause? The cause is still the rising wage gap, rising gap between productivity and wages, which raise profits sharply. But since business opportunities are lacking, these profits go into speculation and hedge funds, etc. That's
Right.
why all other commodities, they also are bid up.
Right. As you have pointed out so many times, increasing minimum wage and increasing unionization to increase wages would be a way to stabilize this system.
Right.
I'm curious we have about a minute before the break, and then we'll pick up phone calls if you can stick around with us.
Okay.
I'm curious, the Fed just dropped the prime rate down another quarter point, down to 2 points. This is really just a fancy way of manufacturing more debt, right?
Definitely. We are saying, hey, consumers, come, things are very cheap for you in terms of borrowing, come borrow some more.
Right.
I think the Fed is doing it because they know there is a lot of worry on Wall Street. Banks have lost billions of dollars, and they had to show that they are still doing something.
So this will just lead to more inflation down the road.
And that, of course, they'll worry about that next year after this
After the elections.
After the election, right.
After the election. So it all comes back to that. You know, it's, as you pointed out so brilliantly in your book, Greenspan's Fraud, you know, the role of ideology and politics and everything else and all this stuff. We're talking with Dr. Ravi Batra, professor of economics at Southern Methodist University, the internationally best-selling author of a whole number of books. You can read all about it at his website, ravibatra.com, ravibatra.com. Our website, thomhartmann.com, for our live chat room, 866-303-2270 for your questions for Dr. Batra. 35 minutes past the hour. It's the Thom Hartmann radio program. And in this hour, we have Dr. Ravi Batra with us. He is the professor of economics at Southern Methodist University and the author. And if you don't own a copy of Greenspan's Fraud or The New Golden Age, which are frankly as good as or better than my books on economics, Screwed and Unequal Protection and We the People. If you don't own a copy of those, of Ravi Batra's books, get out there today and buy them. They're absolutely brilliant. Your writing, sir, has taught me so much. And I do appreciate your being on the program with us. Anything, short-term, long-term forecast for gold. A lot of people concerned about that. And then let's pop right onto the phone lines.
Well, gold has indeed fallen from about 900 or 950 to now about 850. It has fallen by about $100, and I think this is a buying opportunity as far as gold is concerned. What I do, I think, is the best way to buy gold would be to there are some gold companies like Barrick Gold or there are a few gold companies
that are traded on the stock exchanges.
Right, and buy those companies and then immediately sell options on them, so that if suppose the gold price goes down some, then you have some downward protection. If the gold price goes up and these stocks also increase in value, then your minimum immediate profit is the amount by which you sold your call option.
Right.
This is what I have done because when prices are very high, it's very risky to get into them. But this is a way to buy them. Buy gold, buy some of these stocks, and then sell options on them.
Yeah. And so your maximum exposure is letting the options expire and just those relatively small losses.
Exactly. Your losses will be will be small, and your profit will not be small because these options sell very well for good price.
Sure. And for those people who don't have money for investment, who are just literally living day to day, which I think is the majority of Americans, my best advice has always been get out of debt and downsize your life as fast as you can. I'm guessing that you would say the same thing, and is there anything you want to add to that? And also, what do you think about the possibility of the prediction from the head of OPEC from day before yesterday that oil will be at $200 a barrel within a year?
Well, okay. About getting out of debt, my advice here is this, that I would hoard cash. I would save as much as possible and hoard cash and get out of debt only if my job is very secure. If the job is not so secure, then this cash could be very useful in the near future because we could have 3-4 years of very bad economic problems.
So don't pay off your mortgage right now. Instead, keep that money in the checking account.
Right. I would hoard cash.
Yeah, but don't go out and buy a big screen TV.
No, of course not.
Yeah. Okay.